Hi viewers, I am Dr. Velavan, Faculty School of Management, Shastra University. Now we are going to discuss about the accounting entries under GST. Okay, because we have to pass some entries for all GST collection and payment along with claiming of ITC. So here you have to know what are the entries we have to pass for outside supplies, okay, then inward supplies, then at the time of claiming ITC, and also how can we set off ITC, what are the payment procedure at the end. So these are the things we are going to discuss in this session. The accounting entries are similar to the accounting entries usually we passed in the trading concern, but here you have to mention how much you collect GST, how much you pay GST, how can you adjust ITC against CGST, GST and IGST, what are the manners you follow to adjust all these. So this is what here we are going to discuss, my dear students. Okay, so you see, accounting entries under goods and service tax. So in this section we will see the major accounting entries to be generated under GST along with the new ledger account, chart of account to be created, accounting software or ERP, and then granular level of capturing the reporting requirement at GST. In this GST return we need to show data under various sections. So here we are going to pass the various accounting entries for output entries, input entries, when we charge GST in reverse manner. In that case, how can we pass entry? So everything will be discussed, and also based on that we are going to prepare some data, whatever we required. So everything will come under this session. Okay. The new ledger and chart of accounting to be created at GST are output tax liability. This is very, very important. Output tax liability. Output tax is nothing but tax on sale. Tax on sale is called output tax. So all of you know the supply chain of GST. So this is one is manufacturer, then the product will be manufacturer to wholesaler, then it is go to retailer and go to the customers. So customer is a end point. Okay, it's a end point. They have to pay output tax. Customer have to pay output tax. So here output tax is nothing but what? Tax on sales. When our product will go out. This is output. So in that time we have to collect tax. This is called output tax. So simply it is called tax on sale. The accounting, the output tax which directly relate to outward supply. Outward supply means going out. Okay, it recommended to have a ledger account twice and for goods or service separately. So account twice, tax wise and goods. Tax wise means here we have to collect CGST, GST, and IGST, UTGST. Sometimes we can charge GST chess. Okay, then output tax, IGST transfer. So IGST to GST, CGST to GST. So we have to transfer in the sense adjustment. So everything will be Done. So first we have to collect the different output tax. You see, output tax liability CGST, output tax liability HGST, output tax liability IGST, output tax liability UTGST, output tax cess, and output tax adjustment. You see, because all of you know this is a dual tax system. GST is a dual tax system. We have to collect two tax from the customer. One is for CGST, this is for central government. Another one is for HGST or UTGST. This is for state government as well as union territory. Okay. So we have to collect two. So we need to pass entry for both in a combined manner. So you need not pass entry separately for CGST, SGST for each and every output transactions. Okay. So you have to pass each and every output transaction collectively for both the CGST and HGST or UTGST. Okay. So these are the output taxes we are going to collect, and also we have to pass entries for all the output tax liability. Okay. So output tax for GST, output tax for HGST, output tax liability for IGST, then UTGST. IGST is for inter-state transfer. So when we have outward supply in between the state, okay, when we have outward supply in between the state, now we have to charge IGST. It is also dual. The 50% of the IGST will go for central government, the remaining 50% will go for state government. So this is dual. What I will collect, that will be bifurcated into two. The first part will be for central government. The second part will be the state government or the respective union territory government. So this is what the practice of GST, my dear students. Okay. Then outward supply within the state. Already we discussed intrastate supply and interstate supply. Within the state means intrastate. Within the state means intrastate. We transfer goods from one dealer to another dealer. We transfer goods from ourselves to customers within the state. So you have a head office in Chennai, but you transfer goods to Madurai, Trichy, Tanjavur in Tamil Nadu. I am speaking about Tamil Nadu. Other state students, if possible, are studying this course. You have to take an example with your own city in your state. But you assume that you are running a business in your capital of the state, and you distribute goods to your customers as well as your dealer, agent in different cities in your state. But you transfer goods all about within the state. So you need not supply goods from one state to another, because suppose you are in Madhya Pradesh, you are not supplying goods to Andhra, Karnataka, Tamil Nadu and Kerala, but you supply goods to one customer. He is running a business in some other city in your state. Okay, some other city in your state. This is called what? Within the state. Okay, these accounts will be used for tracking outward supply, that is sales within this state. So already told you, outward supply means sales. So outward tax liability is sales tax liability. Okay, these accounts have to be created separately for goods and services, as we have a requirement to show them separately basis on the format of the monthly GST return 1. That is very, very important. So you have to pass entry as per the return which is given. Here we have to follow GST return 1. So as per the GST return 1, we have to pass entry. But the outward supplies will be in two types. One is for B2B and B2C. B2B means business to business. When we supply goods to some other companies or some other dealer, this is business to business, because you are not sending goods to your customer directly. You are sending goods to some other business or dealer, agent, who are all selling your product in some other cities. In different cities, you transfer goods to them. So not the customers. When you go supply goods to customer, now only B2C. Now only B2C. So B2C means business to business, business to customer. B2B is business to business. B2C is business to customer. Here, both are eligible for output supplies. We have to collect output tax and pay to the government. Okay, even when we have to collect the output tax, even we sell goods to some other business also. Okay. If required, can also have a separate ledger account to B2C large that for supplies under unregistered taxpayers where the invoice value is more than 2.5 lakh. Suppose some unregistered taxpayers are there. So whenever you supply goods to them, you have to maintain a separate ledger when the turnover is exceed 2.5 lakh. Unless otherwise, you have to enter this transaction also in the existing ledger. Unless otherwise, suppose their turnover is exceed 2.5 lakhs, so you have to maintain a separate ledger. But there should be an unregistered taxpayer. Then outward supply outside the state. Outside the state means interstate. Okay, so these accounts will be used for tracking outward supply sales outside the state, in between the state. Outside the state means in between the state. Goods sold from one state to another state. I am in Tamil Nadu, but I sell goods to Karnataka. I sell to Andhra Pradesh and Telangana and Mizoram, Nagaland and Gujarat, Punjab, okay, Chandigarh, whatever it may be, okay. These accounts have to be created. These accounts have to be created separately for goods and services, as we required to show them separately on the format of annual return released in September 2016. So already, whenever you have a interstate sales, the GST authorities released one format in the year 2016, the month of September. So we have to follow the instruction which they have given in this return. In this return, the month of September 2016. Okay. Then outward supply B2B. Okay. Outward supply B2B. Outward supply B2C. Outward supply reverse charge. When we charge reverse charge, when reverse charge is nothing but the beneficiaries have to pay GST directly. Here we need not collect tax and settled money to the government. Okay. Then outward supply for stock transfer outside the state. Outside supply purchase return within the state. Then outside supply for purchase return outside the state. Here both are considered for outward supply regarding outside the state. Okay. You have to keep in your mind both intrastate and interstate supplies. We have to pass entry. That's all. Someone will ask, you have to pass only intrastate transaction. No, we have to pass entries for both intrastate and interstate supplies separately. That is very, very important. Okay, we have to maintain a separate ledger for both supplies, intrastate as well as interstate, my dear students. Okay. Reverse charge liability account. For inward supplies purchase which are made from unregistered taxpayer GST, reverse charge is applicable such transaction, and for tracking such liability, this account will be useful. Many of the taxpayers are the impression that the reverse charge is deferred from time to time, and now based on that latest notification 2008 central tax. Okay. And in 2018 is deferred till June 2018 under Section 9. Subsection of this GST Act, but till reverse charge liability applicable on the notified list of goods and services falling under Section 9, Subsection 3 of the GST. The reverse charge is not applicable for all. We have to follow the notification under Section 9. What are all the services, what are all the supplies are eligible to charge reverse charge liability, reverse charge mechanism. So we have to abide the conditions which are available in the section 9. Okay, so here we have to pass entry for reverse charge liability, CGST, reverse charge liability, GST, reverse charge liability, IGST, reverse charge liability, UTGST, and reverse charge for GST chess account. So everyone will applicable. So based on that we have to pass entry carefully. Okay, GST on advance. Sometimes we pay GST in advance. As per the provisions of time of supply section 12-13 of the GST Act 2017, GST liability has to be paid on receipt of advance from the customers of goods or service. Usually whenever we place order, here we have to give some advance. Once we give advance, they confirm their order. Suppose you assume that we have not given advance, they may be have a doubts whether we placed order or we may be cancelled anytime. So once we give advance, so they have a confidence we have placed an order. Definitely we buy goods from them only. So this is what the reason they have collect. They collect advance. They collect advance. Okay, so it is still applicable of service provider or the tax provider providing services. To track the liability of such advances, it has to be accounted separately, and same can be reconciled on a monthly basis, table 11A and GST 1, and issue the receipt voucher and while returning advances. Okay. Here you have to understand, suppose you adjust the advance against your output supply, and also after adjusting any advance, you have any surplus money of advance, you have refund. Sometimes they may be cancelled the order, you return their advance. Sometimes you are not in a position to fulfill their order, you convince them and also you return the advance. So here we have to maintain record and ledger for both separately in different ways. That is very important. Very important. So sometimes you collect GST on advance. GST on advance CGST, GST on advance GST, GST on advance IGST, GST on advance UTGST, and GST on advance GST cess. So whenever you give advance, you paid advance, this advance will be adjusted against all, not only for CGST, it has to be adjusted against GST, IGST, UTGST, and GST chess also. Okay, what I am doing, I am explaining all, and then later on we have to pass entry for all the transaction one by one, my dear students. So these are all the entries we are going to pass. So we have to pass entry for output tax liability, both intra and interstate. We have to pass entry for reverse charge. We have to pass entry for advance. Then later on we will discuss about how to pass entry for inward supplies within the state as well as outside the state. So everything. Okay. Then ITC, interim recovery. Interim recovery, that is very important. Timely, these accounts are to be created in case of organization decides to take input tax credit only on updating electronic credit ledger account. This will give full control and information on which invoices input credit is not available. You see, when you avail ITC, when you buy the tax or when you pay input tax, immediately you have to register, upload all the information in your portal, then only you can eligible to claim. So without upload the information regarding ITC which you paid earlier in the electronic credit ledger, you are not eligible to claim ITC. So this is what important. You have to upload and you have to pay. Both is very important. Once you paid ITC, now only you can eligible to claim. Without paying ITC, you are not, input tax, you are not eligible to claim ITC. Okay, this is what very important, my dear student. Moreover, it helps the management in follow and decision making process also. The option would make sense case matching the receipt return, though it may have stress working capital and all. So here you have to pass entries for ITC interim recovery account for CGST, ITC interim recovery account for GST, then ITC interim recovery account for IGST, then ITC interim recovery account for UTGST, then recover for GST HS. Okay. Then input tax credit. Already we have completed, we have discussed output tax. Now we are going to discuss about input tax. Input tax is recoverable tax. It is tax on purchase. It is tax on purchase. It has to be recovered and also can be adjusted against the output tax payable. Okay, output tax payable. Okay, you see, this account can be updated when the input tax credit is reflected in the electronic credit ledger account, and for this accounting ERP being used should be supported. You see, it has to be uploaded. Okay, you have to upload all the transactions, all the purchase transactions. Okay, where are you from bought goods? How many of them are supplied goods to you? So everything should be you have to upload it. Once you upload your detail, in electronic credit ledger, how much you have paid already. This amount is credited in your electronic credit ledger. You can adjust all the amount against the output tax paid. So this is refundable nature. It is refundable nature, but when you are eligible to claim, you have to register your business and you have to supply taxable goods. These two are very, very important. You should be the registered person, taxable person, and also you have to transfer. You have to supply only taxable goods. So when you do all, I mean these two is compulsory. You are eligible to claim ITC. Okay. So here you may recover ITC from CGST and GST, IGST, UTGST and GST. So here you have to pass entry for all separately. When you claim a recovery of ITC from GST, GST or CGST, or IGST or UTGST or GST, you have to pass entry separately and finally you have to settle them. Okay. So recovery also in all already we discussed. When we discuss about CGST, it includes. This is called deemed tax. Okay, deemed tax structure. Already we discussed. Okay, so when we study CGST, we studied also the GST, IGST and UTGST because it is included in CGST. Okay. Input tax credit reverse charge recovery. When we pay GST on reverse charge mechanism at the time of availing the benefit or services, it will also adjust. This is called input tax reverse charge recovery. So reverse charge recovery for what? CGST, GST, IGST, UTGST and GST chess. All are applicable. Okay, both are applicable here. Okay, you may not worry about it. Even though it is output tax liability or input tax liability or reverse charge recovery. So all we have to collect and pay and claim for three. CGST, GST and UTGST and IGST everything and IGST everything. Okay. Input tax reversal account. When we reverse our account, input tax also adjusted. Input tax adjusted, but it should be within 180 days, not more than 180 days. You have to reverse your ITC. Once you claim, reverse means you have to refund to the government within 180 days, unless otherwise you will be punished. Once you have not returned within 180 days, 24% interest will be charged for you. This is heavy loss for you. So you have to treat ITC reverse charge mechanism carefully. Okay. So ITC reversal for CGST, AGST, IGST, UTGST, then GST, chess. Everything is applicable. We have to collect and pay. Then ITC, GST interest paid. Already you know, when you are delaying for payment of ITC, you have to pay 18% interest. 18% interest we discussed so far. So at the time of interest on delayed payment of CGST, interest on delayed payment of GST, interest on delayed payment of IGST, interest on delayed payment of UTGST, interest on delayed payment of GST, chess, all you have to charge interest for both, not only for GST. So when they charge interest for GST, it is also applicable for both GST, IGST, UTGST and GST, chess. Okay. So here you have to pass entry for all interest payment separately. See, on the 108 first day, I mean 180 first day, I mean suppose you are not paying money within 180 days, the 181st day they are charging interest along with interest. Okay, so 180 days is time for you, so it should be less than 180 days. So when you are not paying 180 days, 181st day you have to pay both principal plus interest. Okay. Based on the accounting package, ERB, a new ledger account can be created. Option using EFF or GDF in Oracle applications or any other name which whenever it is called. So GST, ITC, interest payable account. So here we have to maintain account for all separately. The following: output tax, inward output tax, inward input tax, then reverse charge, inward reverse charge, output reverse charge, then interest payable. Everything is maintained separately. Okay, that is very important. So here also ITC interest payable account CGST, ITC interest payable account GST, ITC interest payable account IGST, ITC interest payable account UTGST, then ITC interest payable account GST chess. Okay. ITC GST interest interim account. This is for suppose the amount of interest paid 181st day will be reversed, and when the supplier of the goods or service both sent back, so both is paid back. Okay, suppose they return your goods, suppose you are cancelling and return back, it is also returned to you. So here you have to maintain interim account. Okay, interest interim account. So based on the all ERP, we have to pass the entry for GST ITC interim account for GST, GST, ITGST, IGST, UTGST, GST chess. Okay. Good. This is what we are going to do. Okay. Then ITC GST interest recovered account. On payment to the supplier, the input tax credit is eligible again, and the same time the amount of interest paid at the time of reversal is also eligible. So it can be used only for future payment of interest. Okay. So once you pay interest cannot be returned, but the amount you paid already can be adjusted against the interest payable in future. This is generally when we paid money to the government, it cannot be returned back. They said, sir, this amount will be adjusted in future payment. This is what happening in the government office usually. Once they collected, they will not return money. Suppose in EB, you take example as an EB, when we pay excess amount in EB, then you go, later on we came to know we have paid excess, then you go and meet the people and made a request to payment or return. They will return money. Simply they will say, sir, don't worry, sir, you need not worry about that. Your money is always ours. Because you are going to pay, you have to pay EB bill in future also. You are not disconnecting your connection. You are still using. So that amount will be adjusted in the next bill. So go up and down. So no one will give money to us. Okay. So GST, ITC, interest recovered account, GST, interest recovered account, HGST, interest recovered account, IGST, all. So whenever you take the individual component like output tax liability, input tax liability, reverse charge mechanism, interest payable, interest recovery, we have to adjust in all the three. That is very, very important. Three in the sense what? CGST, HGST and IGST. If GST is possible, we can consider also. Then input tax credit recovery, reverse charge recovery. Reverse charge recovery is also we have to maintain separately with RCM. RCM is very, very important. RCM, reverse charge mechanism. It has to be adjusted against the final payment. Okay. So it has to adjust against the final payment. Okay, input tax credit. So here also we have to maintain a ledger account separately for all. Okay, CGST, GST, IGST, EPGST, HGST. Inward supply. Now we are going to pass entries. Okay. These accounts are required to be captured to be reporting the inward supplies under various categories in the GSTR return. So when you buy goods from registered person within the state or outside the state, okay. When you buy goods from unregistered supplier, when you buy goods from composition taxpayers, when you buy exempted goods, when you buy non-GST goods, then when you buy nil-rated goods. So everything will be considered because we buy goods from all, not only for registered dealer. Sometimes we may buy goods from unregistered dealer also, and also buy goods from composition taxpayers. They are different taxpayers. We have to discuss later who are all called composition taxpayers, what is the tax rate they are paying. Okay, we'll discuss later. Then exempt, sometimes we buy exempted goods, then non-GST goods like petrol, alcohol, tobacco. They are non-GST goods. They are not exempted, but they are not coming under GST purview. Anytime they will come. Then nil-rated goods. Some goods are nil-rated, zero-rated goods. Okay. So everything. But we have to pass entries as per GST return to GSTR 2. GSTR means GST goods and service tax return 2. One is for outward supply. That is very, very important. Then the above accounts has to be created for each registered number in case you have a presence of more than one state. Each registered number means, suppose you are doing in Tamil Nadu, only you have one registration. Suppose you are doing business in different state. Take for example, you are doing business in 4 states in India, you must have a 4 registration number.